Welcome to Trading HD. We are going to analyze Alibaba Group. But first of all, guys, remember to read the disclaimer right here and in the video description below. I'm gonna tell you guys, Alibaba Group, one of the key stocks this year in 2024, and we're gonna tell you why it happened, because right now the stock rebounded strongly, and we're talking about like more than 60% from those lows back in January 2024. Absolutely nuts, but it did happen twice, and let me explain you why. Because it's like back in 2022, it was the first time the stock rebounded, but still, it's like we had some issues with the fundamentals. Let's take a look at let's take a closer look to what happened right there, and you can clearly see in the last quarters. Look at this downturn that we suffered back in 2023, 2024 at the beginning. They had a net income back in March 2024 of 454. So if you take into consideration what they usually have of revenue, obviously that was the lowest level seen in 2 years, and that's probably one of the explanations the stock went down like minus 46% since those highs back in January 2023. So obviously right now the scenario is different, because this last quarter, and probably one of the reasons the stock is skyrocketing right now. Look at the breakout that we have right here, the retest, and the boom, skyrocketing, and that happened especially after the earnings. Look at that. We have, like, first of all, one of the key things is to understand why a stock is skyrocketing. Normally the stock, they say it's like it doesn't make any sense, the trends, but they do. And one of the key things is look at the reported earnings. It's like it was better than the estimate, so we have a positive surprise factor. And when that happens, especially when it's more than 5%, 7%, normally that's good for the stock. It's like the reality is better than the expectations, and the market reacts very positively in that sense. Second explanation, look at the net income. Then the net income is 3.3 billion in that particular quarter. If you take into consideration the last time we got those earnings, it was back in September 2023. At that time, when those earnings were released, the stock, look at that, it went down, but it was a different market, because if you take into consideration, it's not only the earnings that are released in that particular moment, but the expectations of the next one. And the expectation of the next one, it was bad. And actually, look at that. We had 2 quarters that were worse than the previous one. So it's important to notice not only the present, the surprise factor, the positive surprise factor, but also the future. And let's talk about the future, actually. So we're gonna get more data about what it could happen in this stock. And look at that. We have an estimate right now. I think this is not updated, because this has been, and we have several quarters that are, not updated still. But look at the third quarter, 2.79. And look at the expectations for this year. It's like similar to the previous year in 2023. So if we take into consideration just that, in 2023, it was trading around those levels, the current levels that we have right now. So it makes sense, that if we have like a same amount of revenue, the same revenue as the previous year, the stock should be trading around those areas. But also, we have another factor, the hype. And in this case, after suffering such a huge crisis in China, Alibaba, as well as all Chinese stocks and the Chinese market, is it's rebounding. And it's rebounding because right now the Chinese government, and this is important because geopolitics and government decisions, they also play a key factor in the future of the stocks. And in this case, right now they have a plan to make to grow the Chinese market again, to add more capital, to reinvest, to foment this type of to foment, in essence, the Chinese market. So when they announced that, the stimulus packages and so on and so forth, look at that. The reaction is huge. And that's normal. Look at what happened back in the crisis of 2020. This crisis that created like a huge market opportunity. And then the Fed, the European Central Bank, they decided to include a lot of stimulus packages. That's essentially like giving free money. And when that happens, the market reacts like in a huge way. positively speaking. And this is what's happening with this stock. What it could happen, we have several scenarios. Here we have the projection for the next one. We have an estimate of 2.11. So in that sense, it's very similar to these actual earnings, but the trend is completely different. Right now, it's skyrocketing because of the hype, because of the earnings are better than the previous ones, and the expectations are very similar to the current ones. So when that happens, it's like investors, they don't want to miss the opportunity to enter at this price, which is the lowest price in in the last years. You know, so this price, the last time we sold those prices before 2022, we're talking about 2016. So that's why, well, a while ago, you know. And look at the point of control of the volume profile right here. Very important factor as well. According to this, we should be trading, particularly at $80. But the thing right here is like when we already breached that level, the next moves that we have right now, and this is very important, all this the trading activity is no longer there. That means we reached those levels, and the next ones, look at that, there is no resistance. So according to this, there are no psychological levels for investors to sell at this point, to sell at 130, to sell at 140. This is my opinion, of course, but based on volume profile, it's like there is no resistance. So that means, that it could happen the same scenario that happened back in 2017. Like no resistance, the stock is skyrocketing, and look at that, completely beautiful, and the performance absolutely nuts. We're talking about 100% in a very short period of time, So different scenarios. Let me know what you think about the stock, and obviously follow us on YouTube. Rick is not available today, but he will be. Actually, here we have it. The display. Let us know what you think about this stock and what it could happen in the future. Is the good stock to buy and hold, or just to buy and hold it for a short period of time? What do you think about Alibaba? Leave your comments below. And to end this video, also we're gonna have like the most popular stocks on Wall Street right now, and look at that, we have the Alibaba stock in one of the best moments. We're talking about, this is the 9 most popular stocks right now on Wall Street. Nvidia, look at that. At the beginning of the year it was trading at $47, right now 124. That's absolutely nuts. But with Alibaba, something similar. It was trading at 68, and right now it's trading at more than $100. Look at the skyrocketing trend that we're watching right here. It's completely beautiful. Those who bought at this area, and actually it's a very good area to buy, it's like when everybody is selling, it's like normally if a stock's is about to recover the net income, is the best moment to do it. This is the case. Sometimes if they don't recover those losses, and actually it goes and it goes like even worse, there is no best moment. But it's something that you need to take into consideration. That's the importance of the estimates, and that's why you have to analyze the opinion of the Wall Street analysts, because in the end they're working doing that. It's like it's not that you have to trust them one blindly, but it's an important key factor to consider it. And look at the other stocks that we have. Palantir, another key element, that happened. Very similar to Alibaba, very similar to Nvidia, like the stock is skyrocketing. Very similar forecast, like expectations completely beaten. So when that happens, this is the result. It's like this is the stocks that an investor has to buy. And there are other examples that are not so good. If you took into consideration, and I'm going to show you an example right here to end the video. Intel, look, let's analyze Intel for a second, because right here, we're talking about a net income. Look at that, minus 1.61, and look at what the stock did afterwards. It's like this is the real scenario of stocks that are performing really bad in terms of net income, and that's why I really like the net income, because if a stock is in negative territory, investors pay the bill. And look at that, minus 664, minus 2.7 billion. When that happened, the stock was at minimum levels. And the last one right here is like, whoa, everything seems to be better right now. No, the reality is not. It's not the case. And when the investors realize that, they fly away. And look at that, the stock went down completely crazy, minus 62%. So these type of situations, negative net income, we have to avoid that. And we have also to pay attention to the forecast, because look at that. If the expectations of the next forecast of Intel is bad, maybe there is no reason to buy the stock at these levels, A different scenario would be like this one. You buy the stock in 2025 with the expectation of a better earnings in 2026. Wow, that could be the case to buy the stock. But at this particular point, look at that. Intel is not in the best moment. This is the difference between Intel and Alibaba. Alibaba is completely the opposite. It's like Alibaba, we're talking about like a important net income. Do you know Alibaba? Let me type right there again. And look at that. You know, it's like when you take a look at the financials and the forecast, it's like the expectations are better. Definitely, it's like there is not a huge drop in the revenue. There's only one drop right here in the fourth quarter of 2023, but we recover from those levels. And when investors realize that and there is no huge tenure again, they start to buy the stock again. And this is normally the case, you know, obviously, not 100% of the cases. But obviously, if we have a positive net income and the net income is going higher in terms of the estimate in the upcoming quarters, that's a better reason in terms of risk management. It makes more sense to buy stock like this instead of Intel, you know? Not to mention penny stocks that are in completely negative losses every time going worse. That's a very dangerous situation. You have to think twice before trading those stocks. So thank you very much for watching this video. Leave your comments below and welcome to Trading HD.